Isn't that interesting? In the last month, where most altcoins went up, it's especially the DeFi tokens, the tokens of decentralized finance like CFX, like Ethena, that outperformed. The question is why? Let's have a look at who's buying here, who's selling here, how much longer this rally can last. Let's use on-chain data, the data most people are not looking at. Now, I've published 2 videos on Ethena before on this channel. The first video is 500 days old almost, and that outperformed the average video quite a bit. There was a lot of attention. Another follow-up video was published 2 weeks ago, and that video just performed average. So it seems like the hype, the excitement around the token is declining over time. The price, however, is far away from declining. Bitcoin in the last month just went flat. Almost no gains, almost 0.4%, and that compares with Ethereum that went up by 40%. And of course, Ethena can benefit from that Ethereum appreciation. Ethena is a decentralized finance protocol built on top of Ethereum. So it issues stablecoins, synthetic stablecoins, and there's also a yield on those stablecoins. The Ethereum rally, of course, has been triggered by Wall Street yet again. So there was a lot of demand through the Ethereum ETF, and that demand pushed up as extension Ethena's price as well. But it's not just the general macro picture that's helping the ENA price. Have a look at this. This is the total value locked chart. So the chart that shows the capital that's used in the protocol over time. This grew now to above 10 billion. The US dollar chart looks more smooth than the Ethereum denominated chart. And again, because we are looking at a stable coin protocol. The stablecoin is called USDE. It's relatively well pegged to $1. The fluctuations aren't too bad. And here's the staked USDE. So the way to get some return on the stablecoins. Now, how that return is generated, we cover that in a second. But first of all, this again is the number of circulating USDE over time. Close to 10 billion. There is real adoption of the platform. This is not just a random pump and dump scheme, but that doesn't necessarily make the ENA token a good investment. So there's many things that have to work out well. Synthetic stablecoins do have a bad reputation because of the UST DPEG. So in the early days, there was the Terra Luna protocol, the Terra Luna blockchain, and on there was the Anchor protocol that promised a very high APY, 20% per annum on stablecoins. Unfortunately, that stablecoin wasn't engineered that well. It did depeg, it went to zero, and it was backed, just like the Ethena stablecoin, by crypto, not by deposits in bank accounts like USDT or USDC. Now here's how this all works. Ethena issues USDE, so their stablecoin, by doing some kind of arbitrage. So there are deposits of various cryptocurrencies on Coinbase, and then short positions on perpetual futures are opened on various other centralized exchanges. So this is a delta neutral strategy, right? No matter where the price is going up or down, there's both a long and a short involved. The long is just buying the asset. The short is using perpetual futures. Now, why does this make money? It makes money because usually the shorts get a funding rate. The longs tend to pay the shorts in order to get more price exposure. When we bet on falling prices of cryptocurrencies via the perpetual futures, we tend to get that funding rate, and that's then funneled over to the people that stake the stable coin. So in a way, Ethena is built a bit more solid compared to, say, the Anchor protocol. The Anchor protocol just pulled out the 20% out of nowhere. It didn't really say how it generates the return, but here we do have a real return generation. The people that trade with perpetual futures, they have to pay those fees, and those funding fees, they get sent over to the stablecoin depositors. The problem, of course, is that still a setup like this is not risk-free, right? There's all those centralized exchanges involved. And so if one of those centralized exchanges suddenly goes bust, if maybe the collateral on those perpetual futures goes kaput, then of course this does have an impact on the Ethena stablecoin as well. But I'm not here to talk about the Ethena stablecoin issuance too much. This is not really what's interesting. What really matters is, where is the ENA price going? What's the demand and supply dynamics? Let's start off with the supply. Let's have a look at the tokenomics. The tokenomics are described in this chart. So how many ENA tokens will be circulating at a particular point in time? We are currently over here where this vertical white line is, and we've already seen quite a bit of token inflation. We went from 1 1.5 billion to now 6.3 billion, more than a 4x in supply. And this will continue to grow. The core contributors, the team, the investors, they will get more and more tokens over time. And this then also explains why very long-term ENA actually did not outperform Ethereum. And this should be our minimum bar when we hold something for the very long term, right? We take on more risk by buying an individual altcoin or just say Bitcoin and Ethereum. And that additional risk should get compensated with more return. If you only get the same return or even less return, we are not making a good bet. And since the beginning of April of last year to today, Ethena underperformed Ethereum by 24%. But there is quite a bit of volatility. Now, where does this come from? And can we potentially go higher from here? We are not at historical heights yet. If we were to reach that historical height relative to Ethereum, there's almost a doubling from here in the Ethena price. Let's have a look at the on-chain metrics. We've got 27,000 wallets that hold the stablecoin of Ethena. So that's USDE. And there are 900 wallets that have at least 1,000 of such tokens. There are 350 wallets that have 10,000 such tokens. And there are 140 wallets that have 100,000 such tokens, right? Since this is a stablecoin, one token equates to $1. So we go at 10x in minimum holding. We do not necessarily see that much more adoption in the number of holders. But we have already established how the number of circulating USDE is definitely going up. So this is a few players taking on more and more usage of the platform. It's not necessarily more people, it's just the existing people using the platform more. But let's have a look at the Ethena on-chain data itself. There are more wallets that hold the ENA token than there are wallets that hold the stablecoin. In total, we've got more than 73,000 holders that hold some part of Ethena. And here's the number of holders over time. That looks very different to the stablecoin. So there are more and more investors. The number of tokens is the exact same over here. So 1,000, 10,000, 100,000. And that makes sense given that the price of the token is still very close to $1. The whales tend to grow the fastest, relatively speaking, right? This almost 4x over the time period. The number of retail investors also grew, but it only 2x'd. So it seems like the smart money, the big whales, the people that tend to make the better calls, they are more bullish on Ethereum than the average retail investor. So on the one hand, we've got all of that accumulation, but on the other hand, we've got all of the selling pressure due to the tokenomics. Now, what will prevail? Volatility, of course, will prevail. But what is causing that volatility? Is the team sometimes selling very aggressively and then stopping altogether and then selling again? I'm not so sure. I actually think that the volatility is created by short-term leverage. Because those massive rallies of almost 300% with the massive dumps of more than 70%, I believe that's short-term speculation. Sometimes the perpetual futures traders are betting on falling prices. That's when the funding rate is negative, when the shorts pay the longs. And sometimes they're betting on rising prices. That's when the area here is green. Currently, they are slightly betting on rising prices. By the way, for most cryptocurrencies, we tend to see green here most of the time. And again, that is how Ethena is generating the return on the stablecoins with a positive funding rate, right? They short an asset on the perpetual futures and hold it long on the spot market. The liquidations are somewhat balanced. So sometimes it's the shorts, sometimes it's the longs that get liquidated. But here is what I don't like. And this is why we see all of that volatility in Ethena. There is a ton of trading on the perpetual futures on the price. And unfortunately, trading volume and spot price do correlate. As the spot price is higher, there tends to be more trading volume. As the spot price is lower, there's less trading volume. And currently we are very high on the trading volume, indicating that the price might potentially deflate. And we see this even more pronounced in the open interest. So in how many bets are currently on the price? This is currently above 1 billion. And just have a look at this. When this is very high, when a lot of bets are done on the price, the spot price tends to be high as well. When people tend to move to the next asset and speculate on something else, the spot price tends to be low. And currently all eyes are on Ethena. And again, this is not necessarily a good sign. The chart implies that there could be another 2x versus Ethereum. And the long-term spot accumulation shows very bullish momentum. The tokenomics aren't that great, but the major red flag is the open interest. All of that leverage currently in the price. Now, I do have an announcement to make. I always talk about how to bet on relative valuations, right? How some altcoins might outperform or underperform Bitcoin and Ethereum, and how those relative valuations aren't that volatile, right? We tend to see relatively clear trends, and how there's quite a bit of alpha to be made with this, right? We can outperform using those clear trends. The only issue is that for most people, this is a bit too complicated, right? You have to learn the platform, you have to learn risk management, how to adjust stop losses, etc. And so here's now the big announcement. I have launched for a small number of people to just deposit capital into a capital pool and then automatically copy trade whatever I do. The launch happened 24 hours ago for the annual subscribers of premium of this channel. And it's already going well. Of course, there might be some volatility to the downside, but currently we are 1.7% already in profit. Before that launch, I tried this out myself on a personal account. So I started with 40K, moved this to 60K within 2.5 months. And while I don't expect to get the same kinds of returns when moving more capital and when maybe luck isn't that much on our side, I still believe that the strategies we are using will yield long-term risk-adjusted positive returns. So in the early days, I did this all with borrowing and lending platforms with DeFi. Now I moved to perpetual futures, right? Bets on the price. But this relative valuation bet approach, I already do this for almost 4 years. So that's what this chart is showing, right? If I just dollar cost averaged into Bitcoin, I would have gotten this light gray line as return. But instead, I got the black line in return. And here is how I do this. I check for altcoins that have a quickly rising supply, while the demand doesn't grow at the same rate. So this is the example of Balancer. I show this very often here publicly on this channel as well. Of course, there are way more examples that I share in the closed community. But because of that token inflation, relative valuations tend to go up very, very steeply. So this is now Ethereum relative to Balancer. So we go short Balancer, or we borrow the Balancer token, right? We profit when Balancer goes down, and we go long the thing that we believe will outperform. And then we get a chart like this. It's a strategy that works for many altcoins. Just have a look at the overall altcoin unlocks over time. So how much new supply hits the market and how much capital needs to flow into the market just to keep prices stable. This here is weekly unlocks, and it tends to be in the hundreds of millions of dollars every week. Especially this week is extremely aggressive with unlocks. And so this is the return we get, but that happens because this is the actual performance of the altcoin. And this is a chart we see very, very often. Just have a look at your favorite altcoin with high unlocks relative to Bitcoin, relative to Ethereum, and you're likely going to see a chart that goes down quite consistently. Who's getting all the tokens? Who's benefiting from this? It's the founders, it's the contributors, it's the early investors. They are all dumping on retail. So when you're wondering why your altcoin portfolio tends to underperform Bitcoin all the time, it's because of that, right? It's because all those people dump on you regularly. And so that's how we make money as well. We make money when the insiders dump on retail, and most retail investors don't know how to play the game. I made a lot of tutorial videos on the topic, how to bet on relative valuations with perpetual futures, how to do proper risk management with those bets. And then also, and this is the big thing, right? How to provide capital to a capital pool so that every trade that I make automatically gets copied with your funds as well. So that something like this isn't theory, but actually becomes practice for yourself as well. You don't have to necessarily go through all of those tutorial videos and have to do active trading all the time if you don't have the time. If you do want to trade yourself, there is obviously the offer, because I do share my trades in real time as well, right? For example, here, this is the Balancer short that I announced on the 19th of July of last year. So that was over here. Since then, Balancer outperformed Ethereum by more than 116%. And so if you've got some capital, but also some time, then there's the monthly membership, right? You just sign up, you watch a few tutorial videos, and then you can copy trade whatever I do. And of course, also do additional trades besides that. If you don't have much time though, if you cannot do the active trading yourself and you're busy with maybe managing a business or a very busy job, you've got the capital, you don't have the time, then you can also automatically copy trade me. The automatic copy trading feature is available for the annual subscribers. So if you sign up for the annual premium membership, you get a bit of savings as well, but you also get access to the automatic copy trading, which again, I've just recently started. We don't know yet how this will perform, but in the last 2.5 months on my private account, it did pretty well. And very long term with borrowing and lending platforms, it also did pretty well. I can't guarantee that it will continue to work in the future, right? Prior returns are no indication of future returns, as people say. But in general, I try to get the odds in our favor, right? When everybody dumps on retail, we can still profit from that if we set ourselves up accordingly. A link to premium should pop up directly here on the screen. Just click on that. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.